Hello, this is Mike Swanson. I run the website wallstreetwinter.com, and the odds are you're watching this email because you're on my email list and you got an email notifying you about it. Now, if you're not on my email list, click the link associated with this video and get on it right now, and then you'll have access to my daily commentary on the markets. Now, this is the first video I'm doing for 2020. We have just passed not only a new year, but we're closing out a decade. And right now I know that everyone is out there in the financial media world is making predictions about the stock market, how high is it going to go up basically, or they're talking about Netflix because it's a stock that went up a lot last year. And I'm noticing on CNBC they're talking about Netflix almost every single hour, along with Apple, because those are two really popular stocks that everybody owns. But in this video, I'm not going to make all these crazy predictions like you hear everywhere else. I'm going to talk about one trend that I think is going to be the biggest one in this coming decade. But first, let's think about this last decade and just think about one trend. A lot of stuff happened, that's for sure. But if we can pick out one thing that really defined the decade, it's probably the cell phone, the internet. Because it's addicted so many people, and so many people look at their Facebooks, their social media, and their Instagrams every hour or every minute, it seems, of the day. But this trend has also had an impact on the financial markets, because one thing this decade has brought is the rise of the app trader. The person who uses their app to trade in and out of the stock market. And this is something that was not around, when I started trading. We had a computer, but not a cell phone gadget. And that has kind of impacted the way people interact with the markets, because the cell phones and these apps only have a very limited amount of information on them. Basically, they show you the daily movement of what you're looking at, and that's about it. So what's happening is many people in the trading world are now basing all their decisions based on whether something is up or down a day and how much it's up, and that is mesmerizing them. That is what is driving a lot of behavior, and this is creating what I think is a lot of dumb money in the financial markets, frankly. But it also has brought things that you never would have seen when I started out in the markets happen in the past couple of years. Probably the best example of that is so-called virtual currency. The only reason people were buying these things is they saw them go up a lot on their apps in 2017, so they bought. But the fundamentals of these things are silly. I mean, the notion of a virtual currency is pretty silly in itself, and there was a lot of talk that this was going to replace the dollar or become money, when frankly it can't function as money, because every time you use one of these things you have to pay a giant transaction fee. And then it goes up and down so much, it's not a store of value. And any currency to be viable has to be stable, it has to be a good store of value. So that's just one example of how apps and phones, and another thing to add to that too is when I got started in the markets, internet stocks were the rage and they became a giant bubble. But that bubble happened in the United States. What was unique about that crypto virtual currency situation was that was a global phenomenon of people playing on their apps all over the world. Not just in the United States, but a lot of people in Asia, in Hong Kong, in Europe, in Latin America, just about everywhere. So it was a global phenomenon. Now, what about the coming decade? What could become the number one trend if the phone and and apps were the big trend of this last decade? I think what people are going to want is something real. And the idea that there could be something attractive that's different that got people into these virtual currencies, that's a good idea, because look at this chart right here. What you're looking at is a chart of the US dollar index. It measures the US dollar against a basket of all the major currencies around the world. Now, this went up this year, as you can see from the chart, but over the past couple months, it's turned down. It's below its 150-day moving average. It's below its 200-day moving average. And it's a downtrend. There's no doubt about it. Now, at the same time that this has faded, these cryptos have faded too. So a couple years ago, we were told that they were going to go up if the dollar went down. They're not doing it. They're not going to do it because they're not real, at least in the sense that they're worthwhile. So I believe that those people, though, were right to think that the dollar could get in trouble or that alternatives are good to get into, but they're wrong to think it was going to be in virtual currencies. What is going to happen, and what is already starting to happen, is people are returning to real things. And there's nothing more real when it comes to money than gold and silver. Silver, in fact, was the first recorded use of money in the Bible. So look at this chart right here, and you're looking at the price of gold. And gold had a tremendous run last year, and then around Labor Day it started to correct and pause. So when that happens in the markets, a lot of people stop paying attention. It doesn't make the news unless something is going up tremendously in a single day. Then it's all about the daily news cycle, and if something's pausing or correcting, then they don't talk about it no more. But in the final week of the year, gold turned up. Many of the major mining stocks actually made new highs for the year, going up at a faster rate than the price of gold. And silver, this is the same story. Silver turned up, and some major important silver mining stocks, and even some smaller silver mining stocks, surged in the final days of the year. But that move this summer in gold took gold through the $1,350 an ounce level. And if you look at this chart right here, you'll see that the $1,350 an ounce level had been resistance on gold now for years, and then it smashed through it. It smashed through a base that went back for so long, and it reminds me very much of the first time I first bought a mining stock. Was in the first quarter of 2002, and at that time the $300 level on gold had been resistance for several years. Then it broke through it, and of course gold had a tremendous run in that decade. Gold went up more from 2000 to 2010 than the Dow, than the S&P 500 or the NASDAQ. It was one of the best things that you could own, period. Now, in this last decade, that wasn't really the case again, because gold made a peak when silver peaked in around 2011. And there was a big bear market that took place and didn't really end until 2016. And that big base in gold and resistance at 1350 was a part of that bottoming process. But now we're out of that, and we're starting a new bull market, or we started one last year. Really, I think when it bottomed, it was a new bull market. But now it's clear that we've broken through that long-term resistance, much as when gold did at $300 an ounce about 18 years ago. So I believe, just as gold and silver were the big plays 2 decades ago, they're going to begin that again, or they are. And I think in this coming decade, or this new decade that we're starting now, that when it's over with, it's going to be gold and silver that are going to be one of the big stories. The app traders thought crypto was going to be the big thing. It wasn't crypto that was the big thing. It wasn't the virtual currencies that was the big thing, but it was the ability to trade on apps, which is what they were doing. And when you trade on apps only based on price action, you don't think about fundamentals, whether something's real or not. And now more and more people are going to be doing that. So gold and silver are the plays of the coming decade. And I want you to be a part of that. So get on my free email list if you're not already on it, and click the link associated with this video.